This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on Wednesday. I am Cesar Delgado from Today. Commodities markets are challenging to the inputs and the farmers indeed. We were joining with Mike Zolo at Global Analytics. You're listening to Back Roads of Illinois. Commodities markets are challenging to the inputs and the farmers indeed. We were joining with Mike Zolo at Global Analytics. Hey, Mike, how are you doing?
Good, Cesar. Great to be back with you. It's another Indian summer day here in northeastern Kansas. We've been running a lot of corn in this part of the country. I know back closer to your area, it gets a lot more deeper in the soybeans. In fact, some of my clients in Indiana are telling me they're going to be finished up by this weekend on their soybeans. And so it's been kind of an interesting crop year with the Western Corn Belt running more corn and the Eastern Corn Belt, Central Corn Belt, maybe running a little bit more soybeans. So interesting to see that happening.
Same here as well. It is Indiana's summer.
Yeah, definitely an Indian summer this year. It's interesting because the grain stocks report that we had yesterday, I was hoping that we would stay on the same track as the 2024 crop year, where we try and put in a high in the early part of October and be able to get a little bit more sold and take some of the pressure off the marketing side. Off the combine bushels are being talked a lot about, but maybe we'll have less supply. I think that's kind of where I'm starting to lean, especially in the corn. It would seem to me, based upon comments from clients on both sides of the corn belt, overall, they're just a little bit more disappointed and they haven't hit their yields from last year in the corn as easily as they have in the beans by and large. And so that's something I think to maybe consider as we get deeper into October, and something to consider also, given the fact that the USDA put so many more corn stocks on the market thanks to that stocks report.
How about the corn crop really quick, Mike?
Well, I would say that I'm still closer to a 185 bushel national yield, Cesar, with the idea that we've got disease pressure in Iowa and Illinois. We've got kernel issues and test weight issues. Depth of kernel has been talked a lot about by my clients in Illinois and Indiana. And I would say I talked to a Missouri client just yesterday, and he's almost through, about halfway through his corn at this point. And he said it is much better than last year, but last year was kind of a train wreck in Missouri. He said he's still 30 bushels less than where he was 2 years ago in his corn so far. And he doesn't think yields are going to get better. He thinks the earliest corn is probably going to be the best corn because of disease and drought and kernel depth. So I feel pretty comfortable that it's going to be hard to be above a 185 yield number. And I wouldn't be surprised that when it's come January, we would be closer to like a 181, 182 yield number.
Sure. Mike, starting with our conversation about updating on the trade deficit for right now, what is your correspondence with President Xi to the United States about the soybean demand?
Well, that's a big question mark. It's not about the trade negotiations as much as it is whether China has bought more beans than they need at this point, Cesar. I mean, we have a 25, 26 marketing year import number of 112 million metric tons that USDA is carrying for what China will import. China is at 106 million metric tons. I'm leaning more towards China's number because they're trying to liquidate their hog herd and they're doing it, I think, very effectively. I just noticed this week that the Chinese futures for hogs at the Dalian exchange hit a fresh 3-year low right before the grain stocks report. So while our October hogs at the mercantile exchange has been hitting contract highs this week, or was earlier this week, the Chinese market's at 3-year lows. So I kind of feel like that we're probably going to see 5 million tons less imports overall as it pertains to the US China negotiations. That was a big deal on Wednesday. That was one of the, if not the biggest thing that turned the whole market around after soybeans made a new 7-week low in early trade on Wednesday. We saw new weekly highs, and it was because, in my opinion, President Trump put out on Truth Social that he is going to talk to President Xi in 4 weeks, and that he spoke specifically about soybeans and how President Xi is using that as a negotiating tool by not buying from U.S. farmers. I'm skeptical, though, because I think China feels like they're in a pretty good spot. Brazil is, by some accounts, at a record planting pace on soybeans right now. It's very early, and they could run into drought problems, no question about that. But right now, I guess with the APEC meeting is when they're going to meet. That's at the end of October. Will we get a deal before then? I kind of doubt it. And I guess I've kind of baked into my analysis the likelihood, the higher likelihood that we'll get some kind of a deal by the time we get to the U.S. holidays, maybe Thanksgiving, maybe Christmas, because seasonally, that's when Argentina and Brazil run out of beans anyway. So I still think beans are the leader to the downside. But the fact is that we went down below $10 and we've eroded a lot of price. So I feel like it's a more balanced market, especially given USDA cutting the stocks a bit.
Do you have any concerns about demand that it could be losing their market until January and the new year?
Yeah, that's exactly right. I mean, I think this is where the Brazilians and Argentines and even the Paraguayans have been very aggressive on selling to China. And I do think that they probably stacked up some extra bushels and filled extra bins in China at this stage because they know they're going to go into negotiations with the US. I think they're going to come in and buy, but I think that also goes back to the government shutdown. What if the government shutdown goes all the way to the next WASDE report here in about 10 or 11 days, and we don't have any data to be able to work off of as far as what our export number is? And I think this is where it can be very tricky for us in the commodity analysis and research business if we lose some of our eyesight because the government shutdown and the lack of USDA data. Now, having said that, I think there's plenty of producers, and I myself am a little bit frustrated with the grain stocks report, that a big reason why USDA increased the corn stocks so much more than the trade was expecting was because they cut feed and residual. But feed and residual is not really a supply demand number, it's what's left over. And I think that's a problem when it comes to these very tight years. I mean, we're very tight, and I would say we have razor thin supplies given the record exports that we shipped out in 24-25, and another new record expected in 25-26 by USDA. We really need to know what the feed is and then make the residual a separate line item, because it really changed the stocks number for corn pretty dramatically. Just to give you an idea, that 182 million bushels that they threw down that dropped on feed and residual, that ended up being about 12% of our carryover. And that's a big figure this time of year. So I hope the USDA tightens up and sharpens their pencil, but I would like to see some data and hope that shutdown doesn't last too long.
Yeah, you're right. We are watching the report on next week, but what is your thoughts on the October report?
I guess my biggest thought is I still feel like wheat needs to lead this market out of the downside in terms of overall price trend. If we want a major low in wheat or in corn and beans, we need it to form in wheat. Otherwise, it's going to be sharp rallies, and then the wheat pulls everything back down again, like we've seen the past couple of years. And so I still feel as though the Black Sea, when it comes to wheat and corn, has a lot of unanswered questions. Why are Ukrainian exports in wheat down 27% as of October 1st in their marketing year? Why are corn exports down over 300%? Why didn't they get clipped with the drought more based upon the soil moisture profiles that we saw in June, July, August? And, now we've got some pretty serious flooding in Odessa, Ukraine, that I'm keeping track of. So I guess for the October report, other than the corn and bean balance sheet, exports domestically, and if USDA brings down yield, it's really about the world numbers at this point, because we are in the middle of U.S. harvest in corn and beans, and we're in the middle now of the wheat crop in South America, and we're starting the planting cycle again in South America. So I really think we need wheat on our side at this stage.
What was your thoughts on the corn estimate from August report? It was pretty scary.
Yeah, yeah. I think we've
Uh,
traded through
uh,
those numbers at this point, and
uh,
as I said, I think the crop is shrinking at this stage of the game. You bring up a good point about the crop size in August versus what the final number is, and I think in that respect, it is similar to last year. And so I would look for in the corn, especially, some tightening of the yield. Will it come in October? Let's say the government shutdown doesn't end, that doesn't last more than a few days. Will that tighter yield in corn come in October? Will it come in November? Will we have to wait till January? That's more of a question mark for me. But as you get a bigger and bigger acreage base, which USDA has been doing a couple months in a row now in the WASDE reports, statistically it gets harder to keep a high yield because you have more marginal acres coming in that can drag that yield lower. And I think this year that would be what's going on, especially with the disease pressure. Even the core states of Illinois and Iowa, I think there's a lot more disease pressure than the USDA's seen or factored in at this stage, and it's probably good for a couple 5 bushels on each one of those states' numbers, if you ask me at this point.
Other side of the story, the cattle markets with these prices. What is your position on the cattle on feeds report?
I have no issues with the cattle on feed report right now because the placements numbers were down about 10%, and they were down more than the trade was thinking. It made sense to me, given that we just have a tighter supply and we're probably retaining a little bit more than the market thinks right now, Cesar, because of the prices. We are coming into the fall season for fresh supplies. The yearling sales will be starting now. My mindset would be, with a strong stock market, a weak dollar, tight supplies, no Brazilian beef imports, and no Mexican border being open, that should be able to give us a chance to go back up towards the old highs. And if we do go up to those old highs, I really want to hedge the fourth quarter pretty aggressively in cattle and in feeders. We made our major high in October of 2014, and I see a lot of similarities with 2014, both in terms of the cycles and also the beef cow supply now versus back in 2014. We are much thinner on heifer numbers. There's no question about it. But I feel like that there's enough other things going on that at these price levels, we can go back up towards and check the old highs from August and September. I really feel like it's smart to get a floor underneath us. Most importantly, not just because of the cycle and 2014 similarities, but also because I feel like there's going to be a pretty significant likelihood of a correction on Wall Street. And I think the consumer is probably hurting more than what Wall Street understands. I think there's a big displacement and separation between what's going on Main Street and what's going on Wall Street. And those two meet with the middle class having 401ks. If we see a correction on Wall Street, those 401ks will get hit. And I think you'll see a pretty tough quarter as far as consumption. And I think beef and pork and chicken values are high enough that they will get caught up in that. So we'll see what the retail featuring looks like here as we get ready for the Thanksgiving season, and see what turkey prices are, and also see how bad the bird flu, the HPAI, gets with the birds migrating. That's become a seasonal force as well that we need to keep an eye on.
How do you feel about the cattle markets with high prices, Mike?
Well, I think there's no question in my mind, and based upon the high frequency analysis and data that I get, Cesar, that we are rationing demand. We just don't know how much we're rationing. And it's kind of similar in we think we're retaining heifers. We just don't know how much we're retaining heifers. I would argue that because the heifer prices in some parts of the country, especially as you go south into Oklahoma and Texas, they're getting up there as high as the steer prices. And so that would suggest to me we are retaining a lot more than what the trade maybe expects us to be doing right now by those female prices being so much higher than what they normally would be compared to steers. So I do feel like we're rationing demand. Can we make new highs from what we got done doing a month or so ago? I think it gets more and more difficult as time goes on without some kind of fresh new supply supply news that feeds the bull, like what we had with Brazil or like we had with the Mexican screwworm. And I would just go back and say we are going to open that Mexican border at some point, I think, but maybe it won't be till January, maybe it'll be March, but at some point we will open that border back up, and I think we got to be ready for that.
Do you have any final thoughts on the corn markets and the livestock markets on today's program?
The only thing I would say, Cesar, is thank you, first of all, for having me back. Secondly, please remember there is, risk of loss in trading futures and options. It's not for everybody, and understand the risks involved before you trade or hedge. And on that note, please go to globalcomresearch.com. It's globalcom with two M's, research.com. Take a look at our product services brochure. Take a look at some interviews I've done. Take a look at our 2-week free trial. Please sign up, and please put in the comments that you were listening to Backroads of Illinois. And thank you for having me.
Thanks, Mike. I enjoyed our conversation for today. Mike Zolgo at Global Analytics on Backroads of Illinois.